All right, post-trade analysis for my first trade of 2023. The reason we're doing a post-trade analysis is because I decided to start recording my trading after I've done my first trade of 2023. We're going to do a post-trade analysis on ticker symbol REP. Let's walk through why I went with the trade, why it failed, and we'll see what type of information I can get out of this. So the setup was really on the Bitcoin pair. So let's pull it up. This is the trade setup right here. I entered around here. So since then, the trade went in my favor, pulled back, went really in my favor, pulled back a lot. But I was stopped out around here. Main reason I took the trade. So for the hunt volatility funnel method, you have three impulses. First impulse you can see here. Second impulse you can see here. Third impulse here. This is where we were funneling. This right here was the funnel, and I was waiting for this trade to play out. So what I was anticipating was a target right here. 7415. That gave me a risk reward of 2.81. Not that great, to be honest. Risk to reward ratio, however, on the dollar pair, which is probably what enticed me a lot into this trade, 5.56. So that's a real nice risk reward. And I actually took an early entry, right? Back to my trading journal. Let's see. I got in at, so around just below the mid level of my funnel. So around here, right? Right there, 9.96. So actually, my risk to reward, 17. That's amazing. One other thing I had going in my favor on the dollar pair is if we zoom out and we full screen this, you can see that I was anticipating a inverse head and shoulders. So left shoulder, head here, and right shoulder. I was anticipating here. And that inverse head and shoulders, you can see I have a red dotted line here that's the neckline is at $12. That had a target of $19.50. So what I was really hoping for, to go back to the risk and reward, I would have taken off 60% of my profits if it reached this level here, and then I would have let 40% ride up until the $19.50 level. But that would take my risk to reward of 23.37. So why didn't this trade work out? Well, on the dollar pair, the second impulse didn't even qualify. So when we put the Fibonacci levels, the second impulse has to reach the 0.618 level. The second impulse did not reach the 0.618 level. I think I was really excited to get into my first trade for 2023. I didn't even qualify it. So the dollar pair doesn't even qualify for HVF standard. Still has really nice three impulses. I really like this trade setup because the impulses were very direct, very strong, so it showed a lot of buying. The initial break was really nice, but it just died down, fizzled, probably because it was very low slung. As you can see, the entire volume by price is around the 0.236 level, and low slung patterns tend to just pop and fizzle. Maybe they'll reach your first target, maybe second target, but they'll never reach final price target. Not never, but just less likely. This is a game of probabilities, right? How much I actually lost? I lost $73. My trading account at the time was, I pretty much put my whole trading account in it. So loss divided by account value, I risked 4.88% of my account. Now, what I like to do is for my most confident trades where I'm feeling extremely confident that this pattern will play out, I only like to risk 3% at most. Patterns that I'm 50-50 on, or maybe 75% confident on, I would put a 2% risk on. Patterns I'm 50% on, probably put a 1%. Those are my three risk levels, and I sort of play around in this range of 1% to 3%. The reason I'm going 4.88% is because I'm just building up my account balance now. My account balance is very low. For this trade, my account balance was $1,500. I've increased my account balance to about $2,500 now, and I'm going to keep increasing it monthly, hopefully, and I can also increase it more if my trades are profitable. But why didn't it work out? Ultimately, I think dollar pair proved to be the decider, extremely low slung. So, and again, I mean, the second impulse didn't even qualify. So I should have never taken this trade because of that reason alone. I think the Bitcoin pair probably enticed me for sure. But you know how else I could have gotten out of this trade? So with the hot volatility funnel, there is a time component to the trades. So you take a time component by measuring the distance, the time between the third high of the third impulse. You take the breakout level and you just double that distance. Boom, to see that your target, there's three targets with Hunt Volatility Funnel, and your first target needs to be met within this time frame from the third high to the breakout. Same story with the second impulse, right? So second impulse to breakout, and you can see here I could have gone out at this level because my second price target of, quickly measure it, you see it there, $13.40. If we just move it for you, $13.40 should have been hit with this line here, right? So this is my cutoff, this line right here. If it was not going to reach by this point in time, the 25th of February, I should have gotten out of the trade, and I didn't. I kept it because I was hoping the trade would eventually go in my favor. Up, didn't happen. Yeah, but overall, because of the insanely high risk to reward ratio, I'm not too mad about the trade. The pattern was valid on the Bitcoin pair. Pattern was not valid on dollar pair. Overall, pattern didn't work out, and I lost 4.88% of my account balance.